Feeling a little financially confused lately? Despite the challenging market conditions last year, the energy sector actually performed quite well, making it a bright spot for investors. In this video, we'll be discussing 3 energy stocks that have the potential to deliver strong returns for investors in the coming year. These stocks pay dividends, making them particularly attractive for those looking for income. Whether you're a seasoned investor or new to the market, these stocks are worth considering as you build your portfolio for 2023. Last year was a challenging year for the stock market as a whole, but the energy sector managed to perform relatively well. In fact, it was the only segment in the S&P 500 that experienced an increase in 2022. While the overall S&P 500 lost 19.44% of its value, energy stocks saw a significant increase of 59%. This performance suggests that dividend-paying energy stocks may be a popular choice among investors in the coming year, particularly given the uncertain economic outlook in 2023. Investors should consider defensive stocks, lesser-known names, and blue-chip stalwarts in the energy sector as a way to mitigate risk and increase their chances of success. These stocks not only offer a level of stability, but also pay dividends, making them particularly appealing to investors seeking income. Additionally, energy sector stocks may also provide a hedge against inflation. Furthermore, with the world's increasing energy demand, the energy sector is likely to remain a solid investment in the long term. There are several advantages to investing in energy stocks. High dividends. Many energy companies, particularly those in the oil and gas sector, have a history of paying out high dividends to shareholders. Inflation hedge. Energy stocks can be a good hedge against inflation, as the prices of commodities like oil and gas tend to rise when inflation is high. Growth potential. The energy sector is constantly evolving, with new technologies and sources of energy emerging. Investing in companies involved in these developments can provide potential for growth. Diversification. Adding energy stocks to our portfolio can help diversify it, as the performance of energy stocks is not always closely tied to that of stocks in other sectors. Necessity. Energy is a basic human need and will continue to be in demand regardless of economic conditions. That being said, energy stocks can also be volatile and subject to fluctuations in commodity prices. It's important to conduct thorough research and consider one's risk tolerance before investing in any stock. Number 1. NextEra Energy, NEE. NextEra Energy, traded on the New York Stock Exchange under the ticket symbol NEE, is a company with a lot of potential for growth in the coming year. The company operates 2 main businesses, which are both poised for significant expansion in 2023. Its primary business is Florida Power and Light, or FP&L, the largest electric utility company in the United States, providing electricity to over 5.8 million customers in Florida. FP&L is also a leader in the renewable energy sector, as the world's largest generator of clean energy and owns nuclear power plants in 3 states. Additionally, NextEra Energy also owns NextEra Energy Resources, LLC, which is a leading producer of renewable energy from wind and solar power and a provider of energy services to utilities and other businesses. Both of these business segments of NextEra Energy are well positioned for growth in the future, making the company a strong pick for investors in 2023. NextEra Energy is a company with a diversified revenue stream that includes both utility and renewable energy businesses. In Q3 of the previous year, 3/4 of NextEra Energy's $6.719 billion of revenues came from its utility business, which provides a degree of stability and defensive characteristics that are expected to make the stock attractive in 2023. However, it's worth noting that the company's renewable energy segment is significantly more profitable than its utility business, despite generating only 1/3 of the revenue. The renewable energy segment has higher margins and provides roughly 60% more profit. Additionally, the growth of renewable energy in the US bodes well for the company, both in terms of top-line growth and bottom-line profitability. To top it off, NextEra Energy also offers a dividend yield of 2.1%, which may appeal to income-focused investors. Number 2. Diamondback Energy or FANG. Diamondback Energy, traded on the NSADAQ under the ticket symbol FANG, is an oil company that had a solid performance in 2022, with its share price increasing from $123 to $136. While the stock may not have performed as strongly as some other names in the sector, there are reasons to believe that it will be a solid choice for investors in 2023. Firstly, most analysts covering the stock have a buy or overweight rating, with an average price target of $181, which is higher than its current trading price of $142.60. Furthermore, Diamondback Energy is an attractive investment due to its low operating expenses compared to its competitors, which will become increasingly important in the face of continued high inflation. This low-cost advantage of Diamondback Energy is likely to attract more investors to its shares in 2023. Diamondback Energy is a company that has been returning significant value to its shareholders through its cash flow generation and capital allocation strategy. In Q3, the company generated $1.2 billion of cash flow, out of which 75% was returned to investors in the form of stock repurchases, and $402 million was paid out as dividends. These actions demonstrate the company's commitment to maximizing shareholder value and indicate a favorable outlook for the company's future performance. These factors, coupled with the company's low-cost operations and positive analyst sentiment, make Diamondback Energy a strong pick in the energy sector for 2023. Number 3. Chevron CVX. In 2022, Chevron experienced a highly successful year as reflected in its stock performance, which saw an appreciation of more than 43%. Additionally, the company's revenue saw a significant increase of 65% year-over-year to reach $181.2 billion in the first 9 months of the year. Furthermore, Chevron's net income nearly tripled to reach $29.11 billion. These outstanding financial results may lead some investors to cash in on their investments in Chevron stock in 2023. However, it's worth noting that the decision to sell or hold a stock should be based on an individual's financial goals and risk tolerance, and it's always best to consult with a financial advisor before making any investment decisions. Despite the potential for investors to cash in on their investments in Chevron stock, it's likely that the company will remain largely unchanged in 2023. On average, analysts expect the stock price to appreciate moderately this year. Additionally, Chevron has a history of consistency in its dividend payments, having not cut its dividend since 1988 and currently offers a dividend yield of 3.25%. This consistency in the company's operations and financial performance may provide some stability for investors and potential investors in the stock. However, it's important to keep in mind that past performance is not a guarantee of future results, and it's always best to conduct thorough research and consult with a financial advisor before making any investment decisions. Chevron has announced its capital expenditure budget for 2023, which is 25% larger than the previous year's budget. Additionally, the company is planning to significantly increase its investments in lower carbon initiatives with a goal of spending $2 billion on these types of projects in 2023. This shows that Chevron is actively working towards a more sustainable future, while also continuing to grow its core business, which had a successful year in 2022. In conclusion, we've discussed 3 potential energy stocks for you to consider for your portfolio in 2023. Each of these companies has unique strengths and opportunities for growth within the energy sector. As always, it's important to conduct your own research and consider your personal investment goals before making any decisions. We wish you the best of luck in your investments and hope that this video has provided valuable information for you to make informed choices. Thank you for watching. We'll see you in the next one.